Oops, what's going on? Ooh, what's going on? Press the wrong button? Oh god. Wow. I pressed the wrong button. Wow. Press the wrong button. I was just looking too long, but why I enter here? Don't know. Let's see. Nope. See that? Oh, I didn't mean that. Should get out of that. So volatile. I don't want to enter 3 micros. I want to be enter 1 contract. Oh well. Nothing we can do. I was looking at 950 macro, maybe just tape reading or setting my size and press the wrong button. Shit happens, it's okay. You see, that's why I warn you guys to trade micros, not minis, because as we are very back on the Trump speaking about tariff again. You know, I don't know anyone remembers when Trump's speaking about tariff, the moves are fucking wild. And if you are trading minis, then it's gonna be 4 figures. You know, if you are losing, you know, you take a hit, that will be like 4 figures. So that's not cool. You don't want that. So let's see if this macro can bring me back into a little bit of profit. Okay. Okay, I'm gonna take some off, lower some risk. Because of the bullish SMT, that's why technically, you know, you should look for longs, but you know, it's hard to say with things going on, you know. But I reckon this imbalance will get traded too. I mean, what I think the other scenario is about the tariff, because we, you know, we have good memories about the previous month tariff price action, and now everybody just wanting that to be repeat. But eventually, this is it, you know. this is not gonna repeat and take everything, you know, everyone off guard on the wrong side, and then it just pump to the all-time highs. You know, that can be another story. So because I've been talking about this previous day high from that Monday high and Tuesday high, which I really don't like, how price deliberately left this high untaken. This is not random. This is something pre-planned, you know. It's not they forgot about that or they don't want that, you know. It's there for a reason, because now all the buy stops are resting above those highs, and price will remember. Price won't forget about these price level. They will go there because it has been programmed to do. Always hunt these highs and lows. So in the system, the box is not ticked, it's not checked. So there is another mission for the algo to revisit these levels. But how like I said before, like NQ loves to retrace a lot deeper than ES. Very aggressive retracement. So it can take you to the other side for so far that you can't bear the drawdown, and then you gave up. You know, you literally just give up, and then price reverse on you. You know, so it's a game of how you manage your risk, really. If you can withstand the losses, the drawdown, then it's fine. Alright. Yeah. So it's a bit busy today. Yeah, there's nothing we can really. I think prices should hang around here. What it would do, I think, chop a bit here, take out some buy stops, drop down, take out this people long here. So I'll get one more off. So wait. No, that's better. That's better. Okay. That's more like it. You know. this 15-minute inversion with the macro time. I think we'll take out these highs, work in the halfway, maybe previous day low here, and find some rejection, come back down, attacking these, and this consequent encouragement of the daily busy. Oh, look at 1 minute. Yes, because everybody waiting to short this retest. You see this drop, this is a trap for people who miss this short. Basically, a lot of traders are waiting price to come back, sort of like a, I don't know, sub resistance area, previous resistance area. I don't know how they draw it, but you know, then retest and short again because they missed it. They want to get in, thinking it's gonna collapse. That's it. That's the you know, the crash they're waiting for. With people talking about all the time. But I think the retracement, the best area to short is the previous daily low. If you haven't heard or watched ICT videos, he said it's the best place to short is the previous daily low. If price is open lower, like this today scenario, if price is lower, the previous daily low will act as a premium array for you to short. That's the best place to short. Think about this. I talk about this today, also most of this week, because I was back testing this, forward testing this, is using a daily open and New York midnight open. You see, I have all these opening price here. When we talk about time, not just macro time, also the open, high, low, close, they are also time, because that's the form of a candlestick, right? So each candlestick represents the time. Yeah, think about that's a 1 minute candlestick, that's time. 1 hour, that's time. Okay, so opening price and the daily is the most heavyweight weighted price. Okay, and once I saw price today, when let me just close this one. It's not going anywhere. Okay, done. So, okay. Let's bring it back up. I don't think anything will happen before 11 o'clock. Today, I took this trade, the short, way before this Trump thing happened. I was around 3 p.m., around 5 p.m. My time, 5 p.m. So it's 5 a.m. Eastern Standard Time. And I was out with my son, my wife, having some food in the restaurant. I was looking at the chart and I saw this. This morning I shorted this Asian range. In the morning, I saw this. It's pumping now. It's okay. Saw this drop. I shorted. Target this low. I was looking at this low, but it didn't come back up. I closed it here, and it dropped on me right after I closed, and it's okay. Come back. Saw this bounce. Basically, this is Asia section. Price swept the Asia low, and the previous no, this is the early 6 a.m. 7 o'clock 7 p.m. low, swap that minor sell side. There's a inversion. I took a long, aim for targeting the Asia high, got out of that, and then this wick, a wick 1, 2, 3, 4 failed to close above the daily open and start change and stay a delivery here, you see, from a lower low, and failed to get back above this midnight open. You see that? Bang it one more time. No, nothing here. You see, there's no more candles up here, right? And you look closely, this is a balanced price range. If you look at a 15 or 1 hour, this is a balanced price range. So price has no interest coming back up and start chopping. Then I took a short, and price start to chop a bit and start breaking down. I had my limit set to previous daily low, but I thought when price start to drop, I have some of our accounts I took it because I was outside. It's quite difficult for me to do it one by one. I don't have a computer. Then I took it off. Managed to took some limit off. Some of my accounts went all the way down. Some of my accounts, no, I have to close it manually. I trailed some of my accounts. I trailed the stop loss down, and that's it. And I saw the news, and there you go. So purely based on this algorithmic price action, you can predetermine where price is going, you know, way before anything happened here, you know, because the draw was clear that previous daily low and the daily BC was here, and I saw London did not take the previous daily low, right? That is another strong conviction for you to target it, because hardly price is leaving any daily lows or daily highs. So that's why I said this daily high is going to get swept in the coming days. I think maybe we get a V-shaped reversal here now and start working ways back up. But today is Friday. I don't think Friday will deliver the range like this, because if you look at the range from this low to here, that's like 4%. You know, I don't think it will move 4%. You know, that's too volatile now. Maybe we get a come back up, take out some high, and then start chopping, and then next week we got a huge gap up. Maybe weekend we get some news. Trump's gonna tweak again, something good news, you know. They have a deal, you know, and then we have a huge gap up. Take out this high already, because think about people shorting here. They not getting out. They don't think it's gonna come back up. Okay, but if price start coming back up, they will close it. So what price will do, the market will go. If I'm the market maker, I will do. I will create something that let them think it's okay to hold it over the weekend, and then pull some good news over the weekend and gap open higher, so they have no chance to close it. So on the Sunday open, they will get wrecked straight away. That's what I'm thinking. But this is the I'm thinking how price should do, but maybe I'm wrong, you know. But looking at this, as long as this SMT is holding, this bullish SMT holding, because before I was looking for this SMT anyway. because that's you. If you can, sometimes you look at the lows, you compare it, you know, compare the distance from ES is so close. So I take ES should take this low first before NQ, you know, and it play out, you know, play out like I was planned it. And we have a daily open here, so price have a open high, low, and close somewhere up here, maybe back to the equilibrium level, because everybody wants to get a piece of, you know, from the market. But is it bank holiday on Monday? Is bank holiday? Okay, so if Monday is bank holiday, then I think, yeah, probably they will do it. I don't think these things is random. Like I said, like the this short I was talking about is a free signal from the Discord. I posted this my morning time, probably your evening time. I saw the news about a hack, and it's nothing random, you know. Won't all of a sudden, oh yeah, our server got hacked. I don't think so, you know. More likely they knew about the hack and then they let it happen, or they do it by themselves and try to exit some of the position, you know, so nobody will question about this drop, right? Yeah. And Trump tariff news announcement when Bitcoin's at all-time high. Remember, this morning I saw he tweeted about Bitcoin going all-time high. So he tweeted Bitcoin about going all-time high first, and then get all the retail hype, you know, hype up and going in to buy Bitcoin, and then the next thing he tweeted about the tariffs, right, and crashed the market. So it's highly manipulated market, right? And before it's like they will do it discreetly, but now it's like you just do it in front of your face, like you spit on your face, and then tell you what you gonna do. It's me. I crash the market and I pump it back up. What are you gonna do? You're not gonna do anything. You can't do anything, right? It's so sick. About Asia and the London session, the problem now is because I think it's just the algo is shifting a bit, because New York is, I think, due to the things going on with the U.S. government and also the Fed and the yields and the bond yields and the bond market, so the New York section tend to be very choppy, you know. It's no direction, because all the good moves happen pre-market. We only get one good move during the free section. If we get a good move like this overnight, they call this London pre-market, it's called overnight section, right? A very strong trended section. You tend to get a consolidation period for the New York. So because I think the smart money knows something. Yeah, Trump is a Judas swing. Yeah, it's so true. I agreed. No, I can't, because in the morning I have to take care of my son, you know. I got so much to do in the morning. I wake up at 7:30 in the morning, Asia time, Hong Kong time, and I spend like 5 to 10 minutes on the charts and see what's going on. And usually I would wake up and I see a huge dump, you know, aftermarket dump, like 4 p.m. 4 p.m. after market closing, and then huge dump, and then 6, you know, New York time 6 p.m. a huge pump, you know. It's a crazy aftermarket, right? So we're getting the aftermarket and pre-market crazy move, and so you expect New York moves like dropping, because they need to consolidate to engineer more liquidity. So Asia is, I want to say Asia and London is easier to trade. Yeah, if you look at this price action today, Asia 6 a.m. open, the new day opening gap is here. It drop, take out this sell side and reverse, inversion, come up, come down, consolidate, create double equal lows, equal highs. So price, what will price usually do is take out the equal highs, you see here, take out the equal highs and then come back for the equal lows. Usually this is the Asia price action. Why it's doing that is to build up the liquidity for London to run. You see, London ran the Asia low first, come back up, ran the Asia high. This is like textbook price action. You know, you can't get any better price action than that. Comparing to New York is wild. You know, sometimes you pull like pump like non-stop 500 points without any retracement, like yesterday, you know, and then all of a sudden drop, you know, a pump, and then drop, chop. Everybody got chopped up here. Even me, I got chopped up here. But then at lunchtime, I managed to get some long here, but it's still very choppy. Look at these wicks. Look at these wicks. And look at this London run. It's so clean. No wicks. You know, breakaway gap. This is what you want to see. You want to see price breakaway gap. Not even coming back. No wicks coming back. So if you enter here, your stop loss somewhere here, you are so safe, because you're never gonna get run to your stop. And then get out from these clean targets. Buy stop resting there, sell stop resting there, clean targets, right? Same as London high, London low. So price can only go up or down, right? Yeah. See, price is not doing anything. Look at that 10 a.m. It take out the high, right? See, and now start coming back down. Everybody wants to do something, you know. Sometimes price won't do it. This is how price get you, you know. You're very impatient. You want to long this whole thing. You think it's gonna go back up into the golden pocket, whatever, 6.8 level, or this imbalance, but it won't. It just go up a little bit, come back down a little bit, go up a little bit, come back down a little bit, and it drives you mad. Now London, look at this London. Back to the London high, drop. Like I said, balanced price range. So price has no interest here. Once price not closing above, then the body is telling you the story, right? And I said, you have two strong opening price above you. You have an old daily open. This is the daily power of 3. Okay. We open here. Wick a little bit. This is accumulation. This London is manipulation. And then distribution lower. This is the daily power of 3. Usually daily power of 3, because think about daily candle opens at 6 p.m. New York time. So the manipulation will happen somewhere in London. Usually if there's no 8:30 news, then London will be the manipulation. Or depending how the daily candle open, right? Because we open below previous daily candle. So yeah, this New York opening price again. So it's very clear that these London lows, they will target, because we have a daily low. below London low, and the daily imbalance below these low. So a lot of sell stops resting here, and price will just take it. Even without the news from Trump, I'm expecting this, it will wick here. If there's no news, and come back up. Maybe take out the London high during the New York Open from this first presented fair value gap, and then roll over and go down. Either way. But Trump's news, it just accelerated the work done, you know. Yeah, this grinding up is good. So this 15 minutes inversion is holding, which is good. And squeezing a lot of shorts out now. They are getting squeezed now. Once his price is traded into this candle, look for previous daily low, maybe get a reaction there, come back down. I think that's the only good trade for today. You know, not every day is a good trading day. If things happen already, there's nothing you can do. But you need to still read the price, watch how price react, you know, and try to anticipate the next move. It's okay to be wrong, you know. We're here to understand why price is doing this, doing that. If you want to be better on ICT concepts, start from the higher time frame, because the 1 minute is just good for execution, really. You know, you can see certain things happen during certain times ahead of those was trading. You know, if you are trading on 4 hour or 1 hour, you wouldn't know what's going on at say 11:01, 11:02, you know. But if you can read the 1 minute, you can see a shift there, maybe 11:01 start shifting, you know. That's about it, really. But the overall direction is happen on the higher time frame. Will tell you, you know, if you pull up a daily chart, and it will show you where price should go. Before this, every day I will mark out the daily open, really, and see where's the closest liquidity, you know, that is one-sided, not already been traded to. Today it was this busy, this consequent encouragement, this previous day wick, the midpoint, the discount wick, and the previous day premium wick. Oh, really? No, I don't look at I did not look at the 1 minute, because what I'm using is I'm using a higher time frame on the daily part of 3. So I only go down to 15 minutes. Go down to 15 minutes. You will see more clear picture as a high time frame, you know. The 1 minute is for execution. Now I because I've been testing a lot, and with a different type of approach, because I try to refine what we can use on the ICT concept. You know, there's so much tools you can use, but I try to find the one that fit me most, and I found I start to like this kind of setup, not even going to the 1 minute. This one is very very easy and clean. I'm basically daily. I marked out the daily open. Yeah, here. Daily open every day. I wake up because I wake up at 7:30 and then the 6 p.m. candle already printed. The daily opens already started. So mark the daily open and let's see. Probably I'm not gonna see all the London price action, only the Asia, right? Not even the Asia. It start at 8. Okay, so I have the previous day New York high, previous day high. The first thing I look for is this high. Okay, before anything happened, I was thinking if I want to see price sweep this high first, so I can target lower prices. Yeah, that makes sense, right? Because we want to see a sweep. A major liquidity push sweep is the best. So this is the closest one. And I see any being balanced down there. You got this engineer sell style here, and the busy, and the previous daily low as well. Okay, so I will take, if I'm bearish, because higher time frame without this drop is bullish, but this drop on Wednesday, it changed the state of delivery because it closed below Monday candle and Tuesday candle, so it started to shift. And Thursday, this candle open inside, but it cannot go above the new week opening gap. So the overall the trend is bearish. It shifted. So I look for lower prices, but before that I look for manipulation to the upside. So I look for this high, but what price did was open, chop, take out the low, the Asia low, come back up, sweep the Asia high without even closing anything above here. No interest whatsoever to trade above the London price. This is balanced price range. Yeah, you see, candle up, candle down. This is balanced price range. So price has no interest. So this is the first signal for me to say, okay, I'm looking for short. Then it failed. Let me turn the so wait. Where's my indicator? It's gone. Wait. Turn it back on. Everything ICT. This. Okay. Now I can see clearly. Okay. Oops. Now the balance price range is there, and price failed to close about the daily open on the 15 minutes. So on the higher time frame, it doesn't want to go up above here to attack anything up here. So I already, this previous daily high idea, I was abandoned it already. Yeah, daily shift in structure, I think. Yes, for this Wednesday drop for sure, because that five-minute bullish candle. So I don't get that. But anyway, and then wait for New York midnight opening price here. You see, like I said, explained it before. You failed to close above this London high, close above the New York open, but it did a sweep, only sweeping the highs of these Asia highs, and it did not sweep the intraday high. You see the intraday high still intact, and traded back below here. This start breaking down once they start breaking down, this is a training state of delivery. You see that 15-minute breakdown, 1 2 3 4 4 candle. This 1 hour candle, 1 hour time, not 1 hour candle, 1 hour time breaking down and come back up. This is a stop hunt. Come back up to stop out all this FOMO short consolidation here, and cannot get above any of these candles. You see, it's getting lower, lower, lower. It's creating lower high. You see that? And start breaking. This displacement is a breakaway gap, and it closed below this low. This is a breakout structure. Yeah, and once it tapped, it wicked this low, open, come up. This is your short. If you you know, regardless of the whatever Trump said, okay, here's your short, and that's your short, and your stop loss above here, this wick, this high, and then you got a breaker here. You see, we don't need to pull all the ICT tools here because they will fit in automatically if your setup is correct, right? You see, you got a bearish breaker, you got an inversion, yeah, you got the bearish order block, this one, yeah, so everything lines up. But I don't need that. I just need the opening price, opening, daily open, midnight open. I showed it there, I can't remember where, but somewhere here. I placed my stop loss quite far away, you know, the 4 hour candle. I look at the 4 hour. No. I stop here, this 2 a.m. candle. I put the stop loss right above 2 a.m. candle. I don't care how the lower time frame is doing. I did not even look at the lower time frame. I just enter the position because my conviction is clean. This previous daily low and the busy. I will set my limit order here at previous daily low. I think price will go there no matter what. You know, right before New York open, maybe it's gonna do a manipulation down before New York open, and then reverse it back when New York open, like it usually do. You know, sweep the previous daily low, form a bullish SMT with ES, and then do a lower time frame shift, and then come back up, do a daily power of 3. You know, consolidation. I mean accumulation, manipulation down, and then distribution up, and take out previous daily high. You know, but then Trump tweeted, accelerate this drop further down to what, standard deviation 1 2 3 4 5 6, probably standard deviation 7 from the Asia range. You know, so yeah. And once price is beyond something, and to get back up, it needs a lot of force to get back up. You see, price now is hanging around here, chopping now. Even you long, it's okay to get, like me, get some points out. Scalping is good, but I won't hold it, because if Trump comes out, say something again, this can do a 1 minute candle and then erase everything, you know, so it's not worth it. I'll probably wait until next week before I'm going to step in. Sometimes you don't need to read all the low time frame candles. It's no point, because think about, in a 15-minute candles, 15 minute is 15 minute 1 minute candles. I don't need to read all 1 minute candle to determine that 15 minute is bullish or bearish, right? If you see this inversion, I don't even need to go to the lower time frame to determine, okay, I took the long there, but I pressed the wrong button. I shouldn't enter with more than one contract. I just don't want to risk. But I press the one button, enter 3 contract and mess it all up. But I was looking to enter 1 here and aim for something somewhere here, you know, not a lot. From this midpoint to this high, 80 points for 1 micro, you know, that's $100 something. It's quite good, you know. I mean, because it's so volatile now, your 1 minute, sometimes you will get caught up with the volatility, you know. See the 1 minute chop, it's really ugly. Comparing to like look at these wicks, people get chopped up here, you know. This drop, people think, oh yeah, it's going back down and attacking these lows and going lower. Nope, sorry, price decided to move up, spooling up, but slowly. Okay, then people think, okay, I'll break this high. You see, break this high and breakout traders will go long here, yeah. Go long, probably go long here. Yeah, looking for higher prices, and what price they come back down, stop them out right there, and then continue up. Yeah. Now it's trending up. So 1 minute is okay for execution. You can pull a really good execution if you are long. Say say you look at these lows, right? You got these equal lows here. Do a sweep, turtle soup. Yeah. Then you enter straight away with a turtle soup, okay? And then you can really tighten your stops to this wick, right? Look at that. Just target this high. 78 points, 78 handles with 6.75 stop loss. That's 11 R, 12 R. Yeah. Really, you don't want to get the consequent encouragement of this wick. Sometimes you're targeting wicks, target the midpoint, don't target the high. Sometimes price won't go there, you see, and start falling back down. Okay, that's the thing I learned many times. Target this wick midpoint, you pull a midpoint here. See, the midpoint, you guarantee will hit that. The high, sometimes they play dirty things like this, come all the way back down and stop you out before going back up. It's very evil. You don't want to regret it. See, 1 minute is good for this, but only for this. You're only aiming for 1, 2, 3, 4 minutes of work. That's it, done. You don't want to hang around for, say you want to hang around for 1 hour, you know. If you want to hang around for 1 hour, you should use your high time frame candles to do it. Otherwise, it's gonna be painful to watch. You know, if price is not doing anything within an hour, start going up higher, coming back down for an hour, like a lot of people. If people entering here during the 8:30, look at it, sideways. For how long? For half an hour? 1 hour until the opening bell. You know, this is painful because it's gonna. It looks like it's going up. Oh no, coming back down. Oh no, coming to my stop loss. Oh, coming back up. Okay, no, wick. Oh no, give me a heart attack, right? And then it's take off. Okay, you're lucky it take off. If it's 9:30 open, do another Judas swing, take you out, then you'll be very pissed because you waited for 1 hour and then you just got wicked out, and then price went to your direction, and it will kill your mental capacity big time. So this is how, you know, you need to evolve from ICT learning. You need to backtest, do a lot of backtesting,
and forward testing, demo trading, whatever, journaling, and to evolve from his work, to adapt it, to put in your work, use it as your own model, find your own edge. Not everything he taught us is completely correct. I'm not saying he's wrong, but he can change his stuff, right? It doesn't mean he can remember everything he taught us. I guarantee that. He started teaching in 2016, right? That's almost 10 years ago. So can he remember everything he taught? No, I don't think so. So something he said before 10 years ago, he may change it. Like how to measuring things. Sometimes do you use a wick to measure, or do you use a high candle body candle highs to measure, or how you draw the fib, which levels. I mean, you have to adapt it to your to make it to your own system. So power of 3 is the most powerful tool he teaches us for reading price, because this is how a candle is going to print. Let's say always have your higher time frame candle next to you. If you don't have this indicator, it's called ICT higher time frame candles by Faddy. His indicator is really good. Wait, my mouse is run out of battery. Wait. A long time for me to be profitable, No, actually, no. When I first get into trading, I was trading crypto. I make a lot of money trading crypto. I don't know, on a bull run. I think 2020-21, right? Everybody remember that. I actually get out my Bitcoin long and the Ethereum long. I got it out from 69,000. I always remember that day. I was watching Crypto, because back in the old days I followed him. I watched his video every day, because during that time I did not have a clue whose ICT was, okay, and I just follow these crypto gurus like Cryptos, and everybody knows him, right? And he's very dramatic. His video is very cool, and his TA is not bad at all. He's very retail stuff, but because he's only doing swing trading, so a lower time frame doesn't really matter to him. He's trading on daily time frame or weekly time frame. Okay, so a low time frame volatility doesn't care. He can hold a trade for 6 months. He can long a Bitcoin from 30,000. I remember the day that El Salvador make Bitcoin a legal thing, and then Bitcoin dropped from 50k or something, 40k to 30k in just one day. I remember that day. I look at the chart, and then 30k. He longed Bitcoin from that day. I don't know, is it real, right? His long position is something like 10 million long on Bitcoin, and then he held it for like to 69k. It's a crazy day when a crypto bull run is so crazy. But then on the bear market hits, everybody lose their money, right? Including me. I did make some money when the first bear market hit. Shorted Bitcoin like 50 from 60k. Because that day I think Dow dropped about 1,000 points, and because I was watching Dow, and I was using Dow to track the Bitcoin movement, right? So I was watching Dow dropped 1,000 points, so I shorted it, and then I even went to sleep. I don't know who gave me the confidence to go to sleep when I'm shorting Bitcoin, right? I literally went to sleep and set my limit like 20,000 point below, and I woke up and hit my limit, you know. It just did like that. I woke up and I made like 20k, you know. I just, whoa, you know. Then I starting to do lower time frame trading because I start reading more about trading, and once I get into low time frame, then I start fucking it up, you know. Getting chopped up, because when price get into a consolidation, you know, after the big move, it will start chopping, right? Just like this. Before I will have no clues how to trade it, but now of course I can trade this no problem. You see my signals, I can nail this up and down move easily, but before I can't, right? This consolidation, you see this is getting people's nerves, right? Also this one here, I nailed the long, I nailed the short here way before everything happened here, the all time this 106k, way before that. Before this high made, I said don't short, do not short, and price bounce here, I said it will come back up, see, come back up and then form another low. I said this is easy, you just long. People think, oh, it's going down. No, long, you go long, take out this high. And then I said, now you can short, because before this high is taken out, I'm not going to short. People are shorting here, they are too early. I said no shorting, and then I long it all the way here, and then and then once it sweep, I said short, and I short it, and then came back down, and then I close it and I said I long. I said go long, then I long all time highs. So this is easy. Before I can do that, before I was like, oh, I was trying to draw this pattern, and then I got chopped up. Is it forming a bear flag? I was trying to chase the bear flag, and then every time it hit the trend line and I enter position and I got stopped out. Eventually just wear me out, and then one day can't remember and then Bitcoin did a bad drop, really bad drop. I think more than a 20k 10,000 points drop, and I was in a long, and I did not close it. I thought it would bounce. I did not put my stop loss. I just let it run, and then it just liquidate me, you know. Things happen. Everybody, you know, did these silly things before, stupid things before. Then I came across ICT. Then I started learning ICT, you know. Then I thought, whoa, this guy is amazing, you know. This is how you read price. And the first time, when I first used his fair value gaps and things to trade, I thought, whoa, this is really cool. This is really powerful. You know, when you first start trading ICT, you found it, everything lines up, right? But then eventually, things start not looking so good. It's not working anymore. You're hopping, you know, strategy again. You go back to your, you know, support resistance, you know, your patterns. You're doubting yourself, doubting ICT. Then as time goes by, you get there. As long as you do back testing, you read price long enough, you know, and also you need to understand human psychology behind this trading, behind all these candle bars. You know, you need to understand the human psychology. Whose money is on which side? You know, is the big pockets below price or above price? You have to think, why you want to long here, why you want to short here, why you want to buy here. It's not because your pattern is telling you. You don't. A lot of ICT traders, the new ones especially, they treat ICT concepts like patterns. Oh, I see a fair value gap, and price return it. I should look for reversal. Then you are trading patterns. You are not trading narratives and concepts. These fair value gaps are the tools for you to get the best entering like a position to minimize your stop loss. This 1 minute fair value gap is good for entering. It's not narrative. Yeah, I told you price not going anywhere. Price probably going to come back down for now. It won't go up because everybody wants price to go up, right? And it's stuck in the middle. Exactly. This is how the algo is doing. You need to know the algo. If sometimes you ask yourself, if you are a market maker, what were you gonna do to get all the traders' money? Make all the traders lose their money and you win. I think that's how they design the algorithm, right? I believe there's an algorithm. Somebody said no, but when I read using ICT concept to read the price, I know that's it. There's an algorithm because the precision, how they hit the levels, this is not random, all the midpoints, all the wicks that not closing in, you always have the discount and premium level, how price is closing above or closing below. That's computers, engineering, computer science, whatever you call it, Now we have equal highs here. We need to look at the ES first. Is ES doing SMT? Yeah, SMT, see? These are little signature you need to look for a short-term retracement. This SMT doesn't mean it will fall, but it will show for sure that it's going to retrace. Why there's a SMT? Because ES has swept the highs. This buy stops, so it will come down and hunt the sell stops. So there's no need for NQ to go up. You always want to see the ES because ES is apart from bond market, ES S&P 500 is the biggest market apart from bond market. So the volume, in terms of volume, is the heaviest asset class. So you always have to look at the ES, and NQ is very light in the compared to ES. So yes, if ES does a sweep and NQ fail, then that means something. Okay. And this euro long I gave out this morning, just a little bit off the target, but enough, before they do this pump and dump. It's not that difficult if you are looking at a higher time frame. This gold trade, like I said, it will
it did not come all the way back down. It just did a institution order for entry drill here. Tap it, tap the daily. It's a daily busy here, and then aim for the higher prices. Gold is going crazy because uncertainty on the market. Also, you need to look at the yields to determine whether the stock market is going to go up. The other day when NQ is pumping, it's because the Fed was botting up the bonds. That's why you saw a one-sided NQ non-stop. You turn on the 1 minute, you will see 1 minute candle by 1 minute candle to go up. That's the Fed step in. You won't see any retracement because there's no need. They're just offering higher prices. They're injecting money into the market, buy up the market. So there's no need for them to retrace and get some, traders to sell stop like the smart money do. What they're doing is they offering higher prices for what? For smart money to sell. I think it's on Monday. The Monday pump. Let me check. This one. I can't remember which one the CPI is. Somewhere here. Somewhere this candle. I can't remember which one. They pump, and then you see the bonds going up crazy, and the yields dropping crazy. Then to move the bond is you need a lot of money to move the bonds, not just like these. Look, these up candles. Tuesday. This one Monday. The bond was there. I remember during the London, I said, "Whoa, the yields are pumping hard. Whoa." I thought the market is going to crash, but that's pre-market, right? The yield was there already 5.4, 5 point something percent. I tweeted about that. I think I spoke that. I posted in the group, and then the yield, the bonds were dropping fast, and then once the market opened, I think the Fed said something. They injecting liquidity, buying the bonds. And then it pumped up, and then the market pumped up. This is what happened. Yes, Monday. Because the Monday, oh yeah, I remember now. This drop is to China news, yeah. And then gap down. I said I tweaked about this gap down. I said it's gonna gap down. And then start falling. I shorted this and shorted this, yeah. And price hit this busy, see, right there at the consequent encouragement. Look at the wick. It can't go wrong on this ICT stuff. Yeah, always target the daily busy. You see, you go back to all the charts I post with the target. This target. Tag. I always point here at the midpoint. I always find this midpoint and put my target there, because these are the targets, a very clean target for price to go to, and it bounces right at the busy consequent encouragement, right, the midpoint of this huge daily imbalance. And what smart money does, they did is they buy. Smart money buy here, okay, and they knew the Fed is going to pump. Fed pump the market, they can sell here. So everybody went long, thinking, going to all-time high. Retail was getting trapped here. New York, the next day chopped like hell. The worst day we have. People are aiming for all-time high. That's why price is chopping, engineering more liquidity, both sides. Okay, and the next day, news, Is it news? I think news. I can't remember now. Yeah, whatever. And pump one more time, but not touching there. And then it dropped because of the what's that? I can't remember the news. Some news that did really bad. Oh yeah, nobody buying the bonds, and it dropped. The bond auction fell, right? And then market drop. It's not really that. It's because the smart money are offloading their position already. They are selling. They're selling, already done their selling, so they have no interest. And then once the Fed is not buying up the market, they pull the plug, and then it drop like this. Because this is a market, is pop-up market. It's not properly value market, right? Because things don't worth that much. It's all pumped by the Fed, and it's not real money. These companies don't worth that much. So once the money is not there, there's no value, and then the market maker selling more chop, and then with the news, they do it with the news, so nobody asking any question, right? See that price coming back down now. 11:30, I think it's gonna drop. Like, this is a change of state theory. You can try shorts with one contract there. I will try. I'm not gonna take it, but there. Aim for, where's the first percent of fair value gap? I forgot to plot it. Find your first percent of fair value gap. $9.33, maybe $9.34. $9.34. That's on the MNQ though. You need to, if you're trading NQ, but I don't recommend. You need to see how price react to the first percent of the value gap. Once this trade close below, and this 15-minute inversion, then this imbalance here, this 1 minute busy here.
Look, it's coming back up. It's very can chop as well, so expect this, you know, with this. As soon as you see this big drop from London, then don't hold any hopes that New York is gonna be clean. Especially we have very bad New York session throughout the week. You know, this is what it gets you. It looks A plus, and then it comes back all the way back, retracement there, and then start moving again, and then it looks A plus again, and now yeah, see, coming back up, not very A plus. It's paying us really. Bitcoin is coming low. People will buy here, buy this wick, thinking it's a strong support, hoping go to 150k, something like that. But actually, I think coming down for this low first. This trend line, these stops before going back up.
It's not going anywhere. Should take for this high now, because it's holding the first percent of the value gap. And yeah, this high. Ooh, oh. Something like this. The rest of the PM session will be very choppy, I think. It's not really worth it. Goals going higher. DXY is coming for this low. If DXY going for this low, you should see Euro sweep it high. If not, at least this one. Long. Take out this high. another SMT. I'm maybe closing it now. Yeah. Don't like that SMT again. No, I did not use the macro time at all. You know, I already have this daily open and the midnight open. I close my long. It's not worth it. Macro. No, I don't have time to look at the macro because I was outside eating, with my phone. And I only look at how the candle closes, that's enough, because that's time, The macro is the 50, 950 or 1050, 50 to 10 macro, that 20-minute interval is the transition from one candle to another candle, That's why ICT said it's important to watch out, because if you think about open, high, low, close, and that the last 10 minutes is the last 10 minutes the candle closes. So think about if the candle is going lower and coming up to 50, the 10 minutes to close, and it will do a retracement just like TGIF, it will do a retracement. That's why you will see price reverses with spooling, because that is the price try to create a wick. Hardly there are not many candles will close or open with a devil's mark, right? So usually they have two wicks. These wicks are for the hourly wick. Then you will have the 50 to 10 macro. So that's why it's good to use sometimes when a 9 o'clock candle closes and a 10 o'clock 1 hour candle open. That's the same candle as a 4 hour candle open, right? And then you have 4 hour power of 3 and then 1 hour power of 3. So it's very powerful. That's why ICT said use the macro time. And always target equal lows and equal highs, because price won't leave any equal lows or equal highs if price doesn't want to. So it left the price there, induce more traders open position, leaving more liquidity, and therefore they come back later, attack these areas. Now this high is taken. Perfect. So you don't need to be, doing every single trade. You know your setup. Even I got stopped out there. It's okay. I frame another long, looking at these highs. Then you get familiar with this price action. Because once price flip this, we claim this CB and use it as an inversion to go higher, attacking these highs. Found support from the first percent of fair value gap, right? So I don't need 1 minute. See that? I don't need the 1 minute. You just need the 5 minute. But then the downside is you have a larger stop loss because you can't see certain highs or certain 1 minute fair value gap. Let's go down to 1 minute. So 1 minute, you got that shift, come back up, hit the 5 minute. So there's a breakaway gap. So if you do backtest enough, as soon as this, a lot of traders they know their stuff, right? They saw this SMT and the mitigation block here, come up, come down, mitigation block, this open. ICT can do that. As soon as they open and leave, this is a breakaway gap, they will short here. You got 1 minute shift, short, targeting these lows. Then you'll be out before even seeing price reversals. See, if you're working your 1 minute time frame, this is how you do it. 2.5R. Yeah, a lot of people don't understand. This is essentially the same as you do a framer setup on 15 or 5, but then 1 minute it will take you 1, 2, 3, 4, 5, 6, 7, 8 minutes to complete. Yeah, then you don't need to wait. Stop loss is just 18.5 stops. But how can you get this entry? You need to backtest. In the backtest, seeing this SMT failed to take out this high, but ES did. Come down, shift. This is the displacement. This is a shift, yeah. And this candle, it can't even touch the half of that candle, and with this is a bearish order block. You got a mitigation block, whatever I call it. This is not a breaker, because did not sweep this low. So a mitigation block, come down, sweep this, and you're out. So you don't need to worry about this chop. 5. Which one? Which 5? If you're referring to a value gap, you need to say the time. Is it the 1050? 1050? Yeah, this one, right? I marked it wrong. It should be 5, yes. But then this is a wick. Failed to close above these highs. You need to see now it's almost coming up the 11:50. Coming up lunchtime. Once lunchtime, price can come back down. Yeah, 9:55. $9.55. 9:55. That's 5 minutes. No 5 minutes. No 5 minutes. 10:45. Yeah, 10:50. 10:50. This one. 10:50. This is a 5 minute inversion. Yeah, But you need to, for inversion, you need the close above it. This wick doesn't count. You need this 1120 candle, this one, and then the next one, the 1125. This is the confirmation of this inversion. Then you long target this high. That's what I did. $1.5R. Yeah,
Not bad.
really live 55.
I can't see it. Where? $9.55 here.
Right.
Oh, you mean that rejecting that 15? That's the 15, right? Yeah, this 15. The original long that I want to take, and press the wrong button.
No. I just want to get it right. No. Don't say that. I'm not a master. ICT is. There's only one master. It's ICT. So, come back to here. Before, I was framing this on the 1 hour. I mean, you don't need, the thing is, you don't need that low time frame stuff if you're confident enough. Even the 1 hour, you know, you see a shift here. This one open, enter here somewhere. Just manage your risk, but you get more reward. If you look at the 1 hour, you are avoiding all this chop.
No, he said, I think he meant the 9.55 candle getting rejected on this 15 minutes
inversion, right? Or there's a small 5-minute inversion on 7.55 here. Look. Now watch this pre-daily low. Like I said, perfect area for short. ICT said that, not me. And the next level is this bearish order block here. If price cannot get back up above this bearish order block, then expect to roll over during the lunch time. Once the lunch macro start running and it run these sell stops, it won't let anyone stay in profit. Basically, it will retrace fast, aggressive, perhaps back to first percent first chop, and then come down, take out these, and then maybe PM roll over.
I think the selling is starting now, the selling, because with all these news, the bond market is about to crash, right? Yields at 5.032. The yields are crazy. And gold's all-time high again. No, not yet. Coming up. See the euro long? It's coming. The DXY is dropping. The pound
sound stronger. Oh, yeah. And this is the trade I shared in the private channel, the short for Nikki. If anything happens to US and Japan market, it's not going to last. The carry trade is going to fall. You know, see the drop. It's already dropped how many points? 1,000 points. Oil is going back up exactly like I said, like this retracement and going higher. And look at my short for SWE. The hack, that's just bullshit, really. And I saw CZ tweet about try to help. Now every time CZ tweet something, it's not good. I remember last time he tweeted FTX, right? And what happened to FTX? He said he was trying to buy up at FTX, and then end up FTX go bust, right? He is an evil man. Cause I know, I'm Chinese. I know. Look at him, he is so evil. I tell you, man. CC and who's the other guy? The owner, Tron TRX owner. I can't remember his name, but yeah, Justin. It's Justin's son. These guys are very evil, I'll tell you. Yeah. It did the damage. No closing above. Then it's coming down. We have some equal lows here. This one did not sweep. SMT, no SMT, so both no bearish SMT, no bullish SMT, so both have equal lows to attack on. So I won't long it now. Price is so further up. Should drop it down. This once it's we claim this 5-minute CB with a displacement, and then there's a shift. This is your market structure changing state of delivery. If this is a displacement with a fair value gap, then you got a 5-minute display CISD, which pair with there's a tiny inversion. This can close below. If this can close below, then you have two PDRAs here, and don't count this. This is a small one. Then come back up, bump it, go for this, leave for lows. Maybe one more wick, I don't know, one more wick to this first percent fair value gap again and come back up. The prices tend to be very choppy. Maybe do that wick damage, do the damage, back into the range and go higher. It's coming up to lunch, so I don't think it's worth taking any trades. Then long weekend, Tuesday, try to be ahead of the market. Do the London, wait for Asia, crazy Asia opening. Maybe now, if price like not interesting coming back up again at all, then Monday we have a huge maybe gap down. It's not good for market. Then we have a gap down. Maybe Asia range work is way up. We have a 2, 1, 2, 3 new week opening gap overlapping. Then what a strong resistance, the real resistance area. I mean the high resistance. When price get inside here, it will bang around because it's got so many PDRAs here, right? So Tuesday, try to find something on London. Don't bother with a New York open. New York open will be wild again. And I don't know what Trump will tweet during the weekend. You know, make it worse maybe, because he's so arrogant, right? Yeah. Now he's coming after EU, after China. Now he's coming after EU. So they're gonna have an argument over that, and EU is gonna. They're not gonna just silent. You know, they're gonna say something. So they say something, and Trump gonna say back. You know, he won't shut up. And then that's to make it worse. And then we have a gap down Monday. And the bond, I think we have a trouble. This looks so bearish on it. Looks like breakdown. It's gonna come back up, retest, and then come down again. And then look, 10 years even worse. 30 years. So if the yield is going higher next week, then we really have a problem. They really have a problem. I don't think Trump can pay back the money. The debt is so high. If one more rating, you know, company come up and downgrading US, you know, downgrading the US, you know, the default grading, then wow, like ICT said, SHTF, shit hits the fan. SHTF, shit hits the fan. Surely the bond market is not going well, so I mean people are not trusting the US government. And one more thing I talked about this the other day is if the bond market crashes, Tether will be in deep trouble, because do you know that Tether, you know, the USDT, right, stable coin, and they're supposed to pack with 1 USD to 1 USDT, right? And they use all their USD. They put all these USD into bonds, to the 30-year bonds, and also some high-risk bond that they don't want to disclose, which was in a huge loss. So once the bond market go pop, and people are gonna liquidate their Bitcoin position, and then maybe their stablecoin position to get their USD back, and then forcing Tether to sell the bond. Yeah, and we all know that nobody want to buy the bond, and that will create a big problem, like the Lehman's brother, right? Once the bond market go pop, it's no turning back. Stock market gonna crash, and it will be fast. And then the Fed will step in, and then Warren Buffett will step in, and all these motherfuckers will step in, and then people will back them to buy their cheap assets, and they all end up buying, people cheap assets, and they become rich again, and then become the hero, save the market. Everybody praise them. It's crazy. DXY would sweep 98. I said it a long time ago, way before Trump took the office. I said, look back in the chart. I posted before 2017, the Q1, he crashed the dollar. He crashed at the dollar, so that this is way of doing things. I think this style, he likes to crash the dollar, and then the tariff. But last time it didn't work out quite well for him, but because the COVID hit, everybody hated him. But then this time it's different, because the Biden administration fucks up everything, and now everybody likes him, think he's the savior, saving everyone, But people don't understand. He crashed the market, and then he pumped the market. He literally just tweeted recon all-time high, and then next time, and then after that, he introduced a tariff on EU and Apple, and crash it. And his Trump coin, let's look at his coin. Where is Trump coin? What is it? Is it? Where? Yeah. See that? I think this is what I'm doing. Crash the market, come down, take out these equal lows. These are trendline phantom, and it will come down, liquidate everybody, and then reverses, come back up, attack these equal highs, and then somehow he'll pump it back up. I think he will, because he's all about his image, right? And then he can brag about this. Once it's hitting, like, I don't know, $30, and then he can tweak about it and brag about it, and then everybody start jumping in. you know, thinking, oh yeah, we're going to the moon, and then crash again. You know, from a technical analysis point of view, yeah, this is how it, you know, I think it would do. A lot of altcoins are doing the same thing. I said this many times. If you're into crypto, you can look at the gold coins. Things like this, the layer 1, the Chainlink, the AFAX, you know, all this. When before this pump, I was saying that is the crucial area, the weekly and the daily. Most of them are identical, right? The charts, most of them are identical. This weekly busy, and then this daily. I said, if you can find support there, then you go higher. And there you go. Same as AFAX. See, exactly same thing. Hitting the daily busy. Come back up, shift. Finding this inversion, come up. Yeah, exactly the same. You just buy any board the dip here, right here, and ride it. And I did post on Solana long, right from here, right there, 125. TV1, TV2, TV, all the TVs got hit. Look at that. And ETH, my ETH long, $2,000. I think I got at 2.5 here. Also TV1, TV2, TV3 all hit. Now look at that. Long wick come now. This close below. 3 minutes, 4 minutes to go. Once it closes, confirm, reclaim CB inversion. Aim for these equal lows. See how good body didn't get anybody close above here. This is a signature. The wicks did the damage. Look at this wick. Come up, did the damage. Trade back to the order block. Former displacement, fair value gap. There's a 2022 ICT mentorship entry model. The first thing we all ICT students learn is the 2022 model. Yeah. Sweep, displacement, fair value gap, order block, hit, optimal trade entry, targeting equal lows or equal highs. Back during that time, we don't have any first percent fair value gap or inversion. They are the later on new thing from ICT 2023, I think, and we start hearing that inversion fair value gap 2023, and then the first percent fair value gap is from last year, or maybe early this year, I can't remember now. And the latest one is called Venom, which is I think it's a rebrand of his balanced price range. Basically, you got two candles, like balanced price range. Basically, it's balanced price range. Two candles, nothing else, with a sweep, with a low sweeping or high sweeping, and then you have two candles, nothing between them,
and you got this balance price range, and once the next candle open up, then you enter. That's this new model. So yeah, like I said, he can change his stuff because it's his stuff, right? You can change it whatever I want. You can name it whatever I want, but it's still you, the one that's learning. You need to adapt it. You need to try to backtest and then do your own analysis. Do the tape reading every day, and then whenever you post a video, try not to open it first. Maybe because every day he will do a recap video, but don't open it and do your own thing first, and then have your day finish, and then you do your own recap, and then you open his video and see how many things lines up with his idea. Then you will be amazed. If your view or your execution the same as his one, then probably you graduate. Guys, nothing much really. Don't bother with the PM session. Just chill out, have a good weekend, and anything really. I'm on Discord all the time. People seems don't really talk in the Discord, but if you want to say, want to ask anything, want me look at any charts, just feel free to drop me a message. To be honest, I'm not the one like most of the ICT traders. They say I'll focus on one market, but I don't really think that way. You can't focus on one market. I think ICT said that because just to help the new student, don't encourage them to look at the one market, the more market. But I do look at all the markets, because how you gonna improve yourself, Because sometimes when industry is doing this, maybe the forex is moving. See that? Yeah, see, it's moving, it's trending, because the money is not here. Just follow the money, really. Look at the gold, look. Pretty much, I did not trade every single move, but I did all the analysis. Pretty much everything is going according to plan, long and short. Same as the oil, I longed it the whole move up to here. So you need to do, because at the end of the day, if you take away the name, the price, essentially it's the same thing, right? But the characters, the way they move are different, so you learn a lot. Especially the forex, you took a DXY, you look at the euro, you look at the pound, you see a lot of, especially the euro and the pound, and the SMTs are really, really accurate. I take this long, this SMT here, very accurate. The euro pull a lower low, and then pound higher low, bang, there you go, pump, right? And the BTC is it's not that difficult to read comparing to the NQ, because you can see it's very obvious that if you look at Twitter, look at all these people posting on their space about their position. I mean, a lot of people are shorted here. here start building there. They will start I open they will tweak something. I open the short at 100k 105k. I'm looking to add more when it's hitting 120k, something like that. Stupid idea of laddering. This is how you get yourself in trouble. What happens if it goes to 150k, right? Just look at the highs. This high, like this. There's nothing much to read on the NQ anyway. I'm closing it in a minute, right? I like look at the 1 hour or daily. Not much because a lot of consolidation, and then big move and then consolidation. Right, this is what BTC like to do. You know, on a daily. Look, consolidate, move out, consolidate, move out, consolidate, move out. Right. So this is the characteristic of this BTC. And you look at the low time frame, 1 hour. When price pump a lot, start chopping. A lot of people shorter here. And the first, I think it's gonna come back down, but no, we'll never do that. First top, second one, third one. 1, 2, 3 dive pattern or drive pattern, whatever you call it. Building up the buy stops. Final one, taking them out. More buy stops, drop. Take out these four more longs, and then come back up, creating a strong support or buy wall, whatever these people call it. As soon as you see this, people tweeting about book map, saying that the big whale to open there, you know, big whale open the short, big whale open the long, adding 40 million, 50 million longs. That's where you remember they induce trader to long. This is the next stop for when it's come down. We'll take this. See how clean that is? Yeah. This is how you play it. You know, you see this come up, come down one more time. You know, they're building position here. So that's why I said long here. Aim for these, because they won't bring it down before taking these people out, because they won't let them to tweak about they pick the top, you know. Once if they bring the price down or take out this low, these people shorted here will start tweeting, oh yeah, I got the top, I shorted exactly the top. Yeah. So that's why one more pump up, sweep, and drop aggressively, and one more. Look at this, how evil that. And then drop, but still leaving this more engineering, more sell stops, and then all-time high, and then we bring it down with news. Remember yesterday I tweaked let me see.
See that? See that? I said Asia, we are not even in London yet, and I already marked out the New York midnight open right there, yeah, and the daily open here. Sorry, daily open there. So I want to see price come up, taking out this high and come back down. And what price did? Come up. Just go over it a little bit. Look, did not even close above that. And then today daily open, and again same power of 3 concept works here. Oops, sorry. This is that is the one from Discord, right? Yeah. Here, the Asia. London drop. New York come up, sweep the London Asia high. Okay, but it did not drop. But next day, exactly the same thing happened with the NQ. Daily open. It's okay. Do this. Yeah, daily open and then the midnight open. Right there. Sorry, not this. This. And what price do is Asia range, bring down, sweep the Asia low, London reverse, and come up, trade back to this value gap, break down. Now break once price break below the midnight opening price. If it failed to get back up, meaning smart money sold before above it. If it come down and close it back up, means smart money bought below the midnight open. Okay, but because we did this, we did not have any price action above the daily open, meaning this daily candle is a bearish one, right? You see, open the little wick, you can see on the right hand side. Yeah, so this move should go lower. We price to this imbalance, but now this imbalance has to hold. At least the half, the lower half need to stay open. You know, once today's daily candle closes like this, the next one open up, trace down, tap the midpoint of this wick, comes back up, start trading above the daily open,
tomorrow's daily open. I mean yeah, we have weekend, right? And then it will start falling higher because we got weekend candle for BTC. But don't expect much from the weekend. Maybe we get a Sunday fake pump as usual to go as far as take out this Friday high or Thursday high, creating another high, and then Monday open, rolled over again, you know, or it open and trades lower, take out the previous day low. Once it break out previous day low, fail to come back up to print a wick, fail to print a wick, the body closes below this previous daily low, then it will have a problem to go lower. So this is how I anticipated, I anticipate the daily candle. Then you will have a bias because the only two options, right? And because the daily candle will take a long time to print, so any shift in the order flow you can tell, and then okay, so maybe it's not my plan A, maybe it's a plan B. Then you already got the plan B already well planned ahead, right? Then you can trade it. So that's how I look at it. And that's all for today. It's not worth it for PM session. So that's all. I see you guys on Tuesday. Have a great weekend. Please smash the like button for me. Trade safe. See ya. Bye.